Hi, welcome to our channel. First of all, please sign up and leave your like. Janet Yellen says she's concerned about Silicon Valley Bank depositors and is trying to meet their needs. Treasury Secretary Janet Yellen said she was concerned about Silicon Valley Bank depositors following the bank's collapse on Friday, but warned that investors wouldn't get bailed out. Let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, Yellen told CBS News Face the Nation on Sunday. The reforms that have been put in place means that we're not going to do that again. But we are concerned about depositors and are focused on trying to meet their needs. Yellen said she'd been working with regulators all weekend after hearing from depositors to design appropriate policies to address the situation, without giving further details. She wanted to emphasize that U.S. banks were safe and well capitalized and that Americans can have confidence in the safety and soundness of our bank system, adding that the crisis hadn't spread to other banks. Yellen declined to comment when asked if customers with funds stuck in Silicon Valley Bank would be able to get their cash. We're very aware of the problems that depositors will have. Many of them are small businesses that employ people across the country. Of course, this is a significant concern. The Federal Deposit Insurance Corporation, FDIC, took control of SVB Friday after California regulators shut it down when a failed $2.3 billion capital raise sent its stock crashing. The agency protects deposits of up to $250,000, but higher sums are at risk. Janet Yellen said she's concerned about Silicon Valley Bank depositors after the bank's collapse. Yellen told CBS Sunday that banking regulators are working on meeting their needs. However, she said bailing out investors was out of the question. Jim Bianco tells regulators to offer unlimited insurance on bank deposits like they did in 2008 because $250,000 is a made-up number. Jim Bianco urged regulators to offer unlimited insurance on bank deposits after SVB's collapse. The analyst said regulators needed to repeat their 2008 move because $250,000 is a made-up number. Bianco also suggested that banks should increase interest rates they paid on deposits immediately. Jim Bianco urged regulators to offer unlimited insurance on bank deposits as they did in 2008 because $250,000 is a made-up number. Bianco, who runs Chicago-based Bianco Research, tweeted what he believed needed to happen following the collapse of Silicon Valley Bank Friday. The Federal Deposit Insurance Corporation, FDIC, took control of SVB after California regulators shut it down when a failed $2.3 billion capital raise sent its stock crashing. The agency protects deposits of up to $250,000. However, Bianco urged the FDIC to raise the deposit insurance ceiling to unlimited as they did this in 2008. Besides, $250,000 is a made-up number anyway. So make up a bigger number. He also said banks should raise the interest they paid on deposits rates to 3% or 3.5% immediately. This way the public gets the message that your money is safe, no matter the bank or the amount, and the rate paid on your money is at least competitive with other alternatives. This is not a solvency crisis like 2008. Bad loans or poor investments were not made. Money was not lost. So, everyone is going to get their money back, Bianco emphasized at the beginning of his post. However, the advent of online banking meant that depositors could very easily move their money and demanded instant liquidity, he added. This should scare the hell of bankers and regulators worldwide. Hope you enjoyed the video. Please sign up and leave your like. What is your opinion about this?